Welcome to the most recent Tesla Stock Investor Q&A episode. As the world's top manufacturer of electric vehicles, Tesla is constantly at the forefront of innovation and cutting-edge technology. As investors, we want to know everything there is to know about the company's plans, margins, and cost reductions. So we'll be answering some of the most frequently asked questions from Tesla shareholders worldwide in this video. We will delve deeply into the most important problems that Tesla is currently facing, from the much-awaited Megapack margins to the most recent updates on the 4680 cells. But it's not just about the cars. We'll also be looking at Tesla's energy products, charging systems, and even their advertising plans. So settle in, unwind, and get ready to learn everything there is to know about Tesla and its future plans. This video is suitable for all viewers, regardless of experience level with investing in electric vehicles. Let's explore the questions and discover what lies ahead for Tesla. Don't forget to subscribe and give the video a high five. Exciting news! We now have concrete proof of the quantity of Megapacks Tesla is manufacturing at its Lab Raw facility in Bradford. We are grateful to Bradford Ferguson for his commitment to this project. Calculating the number of Megapacks that were loaded or removed from the facility using drone assistance, Bradford returned to the skies again and counted 83 Megapacks in the parking lot, meaning that 16 more packs were generated, bringing the total amount to 58. Bradford had counted 67 Megapacks outside the facility, and 42 had left over the course of 6 days. Considering that each Megapack sells for $2 million, this would indicate that the labor facility is now generating about 10 Megapacks each day, 7 days a week. This might result in a potential 50 margin and an astounding $7.3 billion in revenue annually. Tesla may make $3.5 billion in profit. But since Megapacks are typically sold in large quantities, it's unclear when this revenue will appear in the company's earning reports. Nevertheless, given these astounding figures, it's obvious that Megapacks will be important to Tesla's earnings. If the company emphasizes its production, potential profits, and upcoming earnings calls, this could have a big impact on the stock prices of the company. The production of Tesla's Megapacks appears to have a bright future. Some things to think about if you're interested in investing in Tesla or are just interested in learning more about the business's financial prospects include the Megapacks, which are one of the most exciting advancements and have the potential to be very profitable for the firm. Large format bundles feature the potential to completely transform the automotive sector in a number of ways. Firstly, they have the potential to reduce the cost of electric vehicles by lowering the cost of energy storage and making it more accessible. Secondly, they could increase the range of electric vehicles, which has been a significant obstacle to their adoption for certain customers. Fourth, they might give Tesla a new source of income, enabling the company to keep funding R&D and growing its product line. Fifth, they could hasten the switch to renewable energy by offering a means to store extra solar and wind energy. The broad implementation of Megapacks has the potential to expedite the shift towards a low-carbon, sustainable transportation system and alter the competitive landscape of the automotive sector. Nevertheless, the precise profitability of this new product line remains uncertain, as the figures have not yet been disclosed in their earnings reports. The big question is how much profit the Megapacks will bring in. Projections for margins range from 10 to over 50%. While the higher end of this range may not be sustainable in the long run, it's still an exciting prospect for Tesla and its investors. Despite this uncertainty, it's clear that the Megapacks will be a huge deal for Tesla. Remarkably, a recent survey revealed that 69% of participants said Tesla shouldn't promote. This raises concerns regarding the company's future expansion and client acquisition strategies. Building a second factory is one method they're accomplishing this, but it's still unclear exactly how this will affect their bottom line. Moving on to some specific questions for Tesla executives, one of the most popular concerns is the Cybertruck. People want to know about the specs, pricing, and new features that will be available when it goes into production. While this is certainly interesting for many investors, the real focus is on the Megapacks and the energy business. There's a lot of potential here, and investors are eager for more information about when we can expect formal guidance on the Megapacks and Tesla Energy as a whole. Another question is about Tesla insurance. While this is a nice add-on for customers, it's not going to be a huge moneymaker for the company compared to EVs energy and full self-driving technology. Still, it's worth keeping an eye on the adoption rate and average annual savings. Finally, there's the question of how much revenue Tesla Energy will generate this year with the recent expansion of Megapack production. It's clear that this is a major focus for the company. Investors are eagerly awaiting more information about how much money this new product line will bring in. Tesla investors and fans are eagerly awaiting the company's upcoming earnings call, and many questions have arisen about the company's future. One important question concerns the megapack margins and the scalability of the product. It's noteworthy that despite advertising's critical role in promoting Tesla products, there hasn't been much talk about it. Investors want to know about the margins of Tesla's auto company, which is another essential subject. How well Tesla performs is another question. Uses the Inflation Reduction Act to lower costs across the board for all of its products, including its auto and energy products and charging. This is a crucial question for investors to think about. The next one concerns the 4680 cells that Tesla is developing. People want to know if the cells are living up to the expectations and when sales will. Given that Tesla is putting a lot of effort into getting government subsidies, this is a more urgent matter. Another important part of Tesla's future is the energy sector, and many investors are curious about when it will grow to the point where it can report on its own. When Tesla will permit owners to switch over fully autonomous software from an old vehicle to a new one is another issue from customers. Investors and industry analysts are closely following Tesla's every step. The company's pricing approach is among its most fascinating features. Despite the interest in the subject, the answer to the issue of how Tesla sets its prices is very simple. As a business that has primarily relied on direct-to-consumer sales, the company modifies pricing in response to the volume of orders it receives. When it comes to pricing, Tesla has an advantage over traditional automakers who depend on dealerships to move their automobiles. Because it doesn't have to worry about complicated dealership markups and commissions, Tesla can quickly adjust prices in response to consumer demand. In real terms, this means that Tesla's pricing strategy is closely tied to the volume of orders it receives for a given product. Especially if there is a high demand for vehicles, Tesla might increase pricing in order to capitalize on the market. On the other hand, if demand is less than anticipated, the business may cut prices to boost sales and clear inventory. Of course, Tesla takes other aspects into account when determining prices, including as supply chain costs and manufacturing costs. The company's ability to swiftly modify prices in response to consumer demand is a crucial advantage that has allowed it to stay ahead of the curve in the electric vehicle market, despite logistics challenges and competition from other manufacturers. This pricing technique can be nerve-wracking and thrilling for investors. Tesla's pricing strategy has helped the company maintain its position as a leader in the electric vehicle market, with its finger on the pulse of consumer demand. Although Tesla's megapacks represent a huge advancement for the firm and have the potential to generate billions of dollars in revenue annually, it is still unknown how profitable they will be and when this revenue will appear in Tesla's earnings reports. Aside from megapacks, investors continue to have a number of other critical concerns, such as the scalability of Tesla's vehicle business's product margins and the rate at which Tesla insurance is being adopted. Despite these doubts, investors should also take into account the 4680 cells and the energy sector. There is no denying that Tesla is still at the forefront of innovation, and thank you for seeing, as we are well positioned for further expansion in the electric vehicle and renewable energy industries. For more updates on Tesla's future, please subscribe to our channel and give this video a thumbs up if you are a shareholder in Tesla stock.